In this lesson, we will go over the types of insurance companies. By the end of this lesson, we should be able to explain the difference between a stock insurance company and a mutual insurance company and describe other types of insurance companies. Types of private insurers, based on where they are domiciled. Domestic insurers that operate in the same state which they are organized, also known as an admitted insurer. Foreign insurers that operate in all other states other than the one in which they are organized, also known as a non-admitted insurer. And alien insurers that are organized in another country. Types of insurance companies can be both stock and mutual, and they're based on their form of business. A stock insurance company is an incorporated business organized as a profit-making venture owned by its stockholders. Stock insurance companies are owned by their stockholders who supply capital to support the firm's operation, issue fixed cost contracts, except for flexible premium contracts, that are non-participating and non-assessable, and they pay any residual profits to the stockholders. A mutual insurance company is an incorporated business owned by the policyholders, not the stockholders. Mutual insurance companies are owned by the policyholders who supply capital to support the firm's operations through policy premiums. They issue variable cost contracts that are participating and assessable. In the prior slide, we talked about how a stock company will issue excess profits or dividends back to the stockholders. A mutual can also issue dividends, and that is based on the profit for a particular line of insurance to those particular policy holders. There are several types of mutual insurance companies, one being an advanced premium mutual, owned by the policyholders but do not issue assessable policies. Policyholders pay premiums in advance, and they may pay dividends to policyholders if the premiums exceed losses, expenses, and contribution to reserves. An assessment mutual, premium may or may not be paid in advance, and the policies are assessable based on the actual loss experience at the end of the policy period. Assessments may be limited or unlimited. So, for example, a limited assessment, if there's some sort of catastrophic loss that it may be spread over the next few policy periods. There might be a maximum, and that's a limitation. An unlimited situation, the insurer would seek immediate recuperation of those losses in the current policy period. A factory mutual is a specialized form. Factory mutuals write property insurance on large, highly protected industrial loss exposures. Fraternal insurers are also a specialized form. Fraternal insurers provide insurance benefits, particularly life insurance, to its members. The number of mutual insurers has been declining due to mergers, insolvency, and demutualization, the process of becoming a stock corporation from a mutual. Why to demutualize? Well, the main reason is to raise capital as a small company, as a stock company, and also the ability to pursue merger and acquisition activity. The chart below shows various features of both stock and mutual insurers. So as far as on the left side, the form of organization, in both instances, they are corporations. Ownership on the stock side is the stockholders. On the mutual side are the policyholders. Regarding the election of board of directors, again, stockholder meetings for the stock insurers and the policyholders for the mutuals. Residual profits are shared by the stockholders in the stock companies and the policy owners in the mutual. Continuing on with other types of private insurers, we have life insurance companies. They sell life contracts, annuities, and health insurance. We have property and liability companies that market all forms of property and liability insurance and may include health insurance. Health insurance companies are a specialized class that write health insurance exclusively. Reinsurers are a specialized class that provide insurance to primary insurers, aka the ceding company. Reinsurance is provided under one of two types of contract: treaty or automatic reinsurance, where the primary insurer and the reinsurer agree in advance to cede some type of loss exposure, and facultative reinsurance. The primary insurer and reinsurer negotiate each loss exposures to be ceded on its own merits. You might see facultative in large life insurance cases, where, let's just say, a senior executive of a major corporation has a $20 million life insurance policy that one insurance company, knowing that there will be a payout at some point on the life, would look to diversify that risk via reinsurance to 2, 3, 4, just depends on what their tolerance of the maximum exposure they want for a death claim. Other types of insuring organizations. One is a Lloyd's Association, groups of individual insurers that underwrite risks in their own names rather than the name of the association itself. And we have two types of Lloyd's associations. One is Lloyd's of London and also American Lloyd's. We also have reciprocal exchanges, also known as an inter-insurance exchange. It's an incorporated association where each policy owner is insured by and an insurer of all the other policy owners. And we have banks. While mutual savings banks have been selling life insurance for many years, the banking industry seems to be expanding its business of services by offering a variety of insurance products to its customers. The Gramm-Leach-Bliley Act, also known as the Financial Services Modernization Act, removed the barriers that the Glass-Steagall Act put into place following the Great Depression. This new act, well, it was about 2000, so about a decade old now, but this act allows banks, insurance companies, and wirehouses to be under one company. Other types of insurance organizations, we have health associations. Blue Cross, Blue Shield organizations, and HMOs play a particularly large role in providing health benefits to the general public. As should be noted, the health insurance industry is currently in a state of flux as provisions are implemented of the Affordable Care Act in America in the near future. To summarize, in this lesson we learned about stock insurance companies, mutual insurance companies, and other types of insurance companies. Thank you for your time.